got me. So as I mentioned, today is module 2 of 6 parts or 6 modules. This is the 6 easy steps of commercialization. Now I should point out commercialization is a linear process, A to B, B to C, C to D, D to E. If you miss any of those steps, you're going to get dragged back and you're going to have to cover those. And I'm going to show you why and how as an introduction to this. So first thing I'm going to do is share my screen, and then we'll just walk you through the first 30 to 40 minutes of some knowledge and know-how on how I've done this for the last 37 years. And then from there, we'll open it up to Q&A. Now, this one's a little bit tricky because it involves patents, and I'm not a patent attorney, so you have to forgive me for that. I have a lot of respect for patent attorneys, but I don't recommend a patent early, that's for sure. I'm going to show you why. So let me share my screen and we'll get underway. Okay, so today is all about module 2, ownership and protection. Now, let me dive into this. The 4 things you're going to learn today, and I can only impart 4, I've only got half an hour. Normally we do this as a 3-hour session, and it's part of a weekend course called 6 Easy Steps. But we haven't been able to run those for about a year because of COVID, of course, and we're looking forward to running them from the end of this year. But meanwhile, 4 things are all I'm going to be able to fit in for today. First one is managing your patent costs. That's very important. I'm not saying we shouldn't get a patent, but I am saying you need to manage your patent costs, and that's more than just expense, it's timing as well. You need pre-patent protection options, and you need to understand what those are. So that way, when you have an idea, you can nurture that idea while it's still just a concept and build it all the way through to proof of concept. At that point there, it becomes a project, but you still don't want to patent it until you're about to receive money. And I'm going to show you how that timing will work for you. I also show you what you need to continue with the process to make sure that some things you abandon, some things you just keep going with. And finally, due diligence record keeping is a very important process. And the reason why is if you're organized for this, then the day you present this to somebody for partnership, for investment or collaboration, you're ready with the due diligence file, and there's far less opportunity for people to think about it while you're gathering information for 6 to 8 weeks. And I've seen that happen, and they've ended up turning a yes into a no. So they're the 4 things I'm going to impart. First, I want to give you some background on the 6 steps. As I mentioned, first is it's a linear process. So A to B, B to C, C to D. And some people think I've got away with skipping something like ownership and protection, but you really haven't. If you don't go back and handle it, ultimately you either won't commercialize, or the money you get for it will be significantly less. And thirdly, the risk involved has increased because now you're at a point where people can actually step into your project, and that this will be proven along the 6 steps as you go. Second thing, the 6 steps are not just steps, they're roadblocks as well. So they'll actually crush your project if you're not careful. So it's important that you understand that with each of those hidden behind there is a roadblock. And if you do understand what they are and how they work, like today, you're going to learn all about ownership and protection. You can actually plan around that. So this roadblock of, I need $60,000 for a patent, won't be such a big issue for you. So that's how I'm going to melt $60,000 away for you if I can. So what does the process look like? Just a quick overview. I'm not going to spend too much time at this. First one is ideation and modeling. Ideation is where you start to design the product. That includes costing and pricing, of course, but also how it works, what it works. But the modeling is the commercial model. Now, the value isn't in your product, it's in the commercial model that you wrap around that product. If you understand that, then you understand why Shark Tank people come on and they talk about their product, and some of those are really good products and get really lousy engagement, but others are mediocre products and get really good engagement, and that's the commercial model. Doesn't mean to say that the IP owner has the commercial model, but it does say that the people sitting there, the sharks, understand, and they're building a commercial model in their mind. They're not sharing it because that's where the value is, but they're looking at this and saying, I can do this with it, I can do that with it, this will do this, it will complement this sort of business. I know who I can sell it to at the end. So we work that from the very beginning and start with the end in mind, and we work on a commercial model. Let's just skip ownership and protection because we'll handle some of that today. Finally, next one is the big one that everyone really struggles with, and that's funding. Funding is an interesting way of doing it. We do it radically differently. I've done funding now for 36, 37 years. And up until 2016, I had a hit rate of about 55%. And I was proud of that. But I have to tell you that it's when it gets to more than 95%, it's a different ballgame. And the reason why is because we changed the process, we changed the target audience, we changed everything about it. And we now are able to pitch a 12-point pitch in 20 minutes or less. And we get, I only do 4 pitches to interested parties, and we usually get an offer out of that. In fact, we pretty much in our 100 Days Challenge course, which we teach how to do the funding, at the end of that, we pretty much guarantee that you'll get it. If you don't, we'll do it for you. So that's how assured we are of it. Next is transitioning, which everyone overlooks in a lot of ways. You have to be careful about transitioning because it's all about taking your company from what was an R&D project to a trading company. And you're now sprinting from standing start through to cash flow positive, or high cash flow if it's not positive. And that way you can do things with cash, but more importantly, it gives options to you, to the investors, to everyone else at that point there. And also attracts the private equity funds and other venture capitalists, etc., who are more likely to throw money at a project that can scale and can prove they can scale than they will at somebody who's just getting started. And bear in mind, we call that pre-scale. In America, it's called startups. Here in Australia, it's called pre-scale. So we've got to be careful that you have to be attractive at that point, and that will bring the people in. The venture capitalists don't look for interesting projects. They look for cash flow that they can 10x, multiply it by 10. So let's move from there to scale. The transition is all about preparing you for scale. Scaling is fairly easy if you agree that you haven't got the skills to do it. And we bring in experts, not necessarily us, but venture capital funds, private equity funds who are specialists in your field, because they all silo themselves. They make sure that somebody in aviation will only have aviation projects on board, and there's a reason for that. And it's not about the fact that they have expertise in aviation. It's more that they have contacts in aviation, because that's what they bring to the table just as much as money. Once you scale a project, you've got all the options, including how you're going to get out, which of course is your exit. We tend to say 2 things about exit. First is the best time to do your exit is right now, or before you start, sorry. And the second is right now. So if you haven't done it, you should stop everything and in the next couple of days and work on your exit plan. How are you going to get a value realization point from what you're going to do? If you don't do that, you're actually just meandering. You're moving along, but you're not actually heading towards a target. And if you don't have objectives, you won't make it. So you'll make some money, but really all you've got is a job. So unless you've got a target to do something with, and it could be, I'm going to trade sale this to a major corporation and then work within that corporation, that's fine. You don't have to quit your project, but you do have to have a value realization point for you, and for that matter, for your family and your investors. Okay, so that's the process in a nutshell. And today we're going to handle ownership and protection. So first I want to tell you about this little project here. For those of you who can see it, it's written on there. It's called Easy Drain, and it was a really, really nice project. Didn't make any money. I want to tell you how and why. Now, that project came to me after it was done, and the owner, who was a very intelligent person, a senior partner in a law firm in Australia, and asked me would I dispose of the project. It had been worked for a number of years and needed a price. Okay, how much was that? That person had spent $2.1 million bringing that to market. And that included patents, designs, tooling, inventory, packaging, distribution agreements, advertising. This was actually put on the regional TV just to make sure that for a market test. And it went remarkably well. And then the distribution went into a network called Reese's, which is a plumbing group, and it's still there today. You can buy these 4 for $12 or something. Now, looking at it, you probably were wondering, what does it actually do? It looks like a lid to a drink bottle or something like this. It's actually very clever. In every bathroom, toilet, some other laundries, you have a wet floor, so the water will drain away, and you have a plug, or sorry, a drain, usually in the middle of the floor or to one side, where you can remove the drain grate, put one of these down and push it down an inch or so, and then put the grate back on. Now, what that does is it's a one-way flat. So it'll take water, any other, anything to flow into there will go through, and the flat will come back up. It'll stop any critters from coming back up. It'll stop odors. It'll stop steam. It'll stop water ingress. You name it. There will never be backup from that because it'll actually stop it. Very clever idea. But when you look at that, you don't see that. Now, this was gross overspend in my opinion, because even though the product was really good, when you look at it, you don't know what it is. So if you walk past that on the shelf today in, let's say, a supermarket, you would, if you knew what it was, you'd buy one. You'd buy a packet of 4. Yes, I've got enough bathrooms to put this in. Let's do that. But if you just looked at it, you wouldn't know what it was. And the chances of you buying it, very little indeed. So what went wrong for that person to not be able to commercialize that with so much going for it as in terms of a product? Well, the lessons we learn is you need to get a true value before you start. The true value is a net present value of future earnings. And you have a little bit of extra value if you have a good patent. But the true value is going to set how much you're going to spend on this before you get started. Next, you have to use other tools early to protect it. Going out and getting a patent in it, and then converting that patent and converting it in 40 countries doesn't make sense if you can train it all the way through to cash flow positive by other means and not have the patent process started. And you'll still be protected if you do this cleverly and carefully. But this person was talked into, great idea, I need to patent this, I need to go wide, go big, and it's a great product, but too wide, too big. You need to be able to pay your patent costs from your cash flow. Now, a provisional patent you can afford, but you coming up with $60,000 might be just a little bit above your capacity if you're paying for yourself to develop this as well. And so taking big chunks of money out of the project means you've got to come up with those big chunks of money, and that dives into family savings, maybe superannuation. I've seen people spend it on patents, and I'm absolutely against that. I think you need to be protected, but you don't necessarily need an early patent, particularly when you don't know what the true value is yet, because so many of these patents go out there. People apply for patents and then convert those patents and then try to sell a patent, and people calculate what the patent's worth. It's nothing, because they don't have a market, they don't have an industry to go to. The product looks nice, but nobody's going to buy it. So you need to know that. You need to know what the value is in the future for people buying this. Now, when it comes down to provisional patenting, which I'm saying, yes, you should be able to do that yourself. You should be able to prepare it yourself. It's still worth it if you have the money to go to a patent attorney when you do the provisional, just before you receive money for investors. But when it comes to conversion, I wouldn't try and do it yourself. It makes sense to get a professional to do it, because there's tricks of the trade that you don't know. And unless you want to go and give yourself a patent attorney degree, it probably doesn't make sense. Now, licensing is important. If you're going to do licensing, it's all about the patent. So you're going to need a patent. Others you don't need to. Speed to market can be a lot more than patenting. I've got lots of projects, innovation that I've got that I've never patented, and I never needed to, because I can own it. I show people some of the secret sauce, but I don't share it all. So in a case like that, if I was going to license the process, yes, I would need a patent. It's the best way to do it, unless I have documentation, know-how, knowledge, like a franchise, in which case I'd lay it out. That's a little bit different. But again, if you're considering licensing this in the future, then it is important to get the patenting right. But timing is everything, because if you're going to do it early, you're going to pay for that. And I'm saying the project should pay for it, certainly the big costs. So that's a lesson we learned from jumping into a $2.1 million hole in the ground, which you can't get out of. And my recommendation for that project was simple. And this was about this time of the year, a few years ago, and I said, we're heading towards June, which is the end of financial year in Australia for most companies. I said, take a hit, write down $2 million worth of value on that. And if you do that, you're going to have a nice big credit sitting on your tax obligation. And then if you sell it for any more than $100,000, you're going to do very well out of it, and that will be profit, and you can offset that profit against your losses that you've got tanked up there with $2.1 million write down. So that gives you an idea of how tragic it can be if you don't do this right. It's a great little product. One of the other problems of this product is how do you distribute it? It's now in a plumbing supplies company. That plumbing supplies company is an international, really good company, but who goes in there? You only go in there when you're doing a bathroom renovation or if you're a plumber. That's pretty much the only people that walk in their showrooms and have a look. Their showrooms don't have little products like this. They have baths and spas and basins and all of that sort of gear, very pristine showrooms, but at the same time, they really don't have little products like this with an explanation of what it will do. So, and there's no way that a sales rep in the showroom is going to say, now that we've done your bathroom design, what about one of these? Not for $12 for 4 of them. It's just not worth it. Now, great product. If you can make that for 80 cents and sell it for $4 each, it could be a nice product, but not if it needs TV advertising to market it. Okay, let's move on from a little lesson there on a $2.1 million overspend. Now, market validation is a step you must do before you do any patenting. There's an adage out there on a program that, of research that was done by USPTO in America. They did it from 1995 to 2001. They researched at the 5-year point for people who had patents, who had applied for patents and been converted, and then 5 years later they got their 5-year notice, and in there they put a little survey. This is a little A5 piece of paper. This is way back in before internet days, and they didn't ask how much did you make and tick the dollar amount. They made it very general, but I forget the numbers of categories. I think there's about 5 of them, and I can't remember what they were called, but I do remember one which was didn't make enough to cover the cost of patents, and more than 97% of people fell into that category, or patents fell into that category. So nearly 98% of patents that were taken out did not make enough money to cover the patent costs. Why is that? Not because they weren't good. It's because they jumped in too early before they assessed their markets and they couldn't sell. So it's no good if you can't make money on it. You can have the best looking widget, and people will like to have patents because they're proud of the patent. But if the patent isn't worth money, it's really just you've just bought yourself a piece of paper. So the value can be in the patent when you're licensing, but the true value is in what you're going to get out of sales. Okay, so always conduct a market validation. I'm going to talk a little bit about independent market validation later on. Now, also you're going to need a lot of different protections. Now, I've said push your patent application off, prepare your provisional patent. You could do that yourself, but don't lodge it until the day before you go apply for funding from somebody. So if you're going to get a funding partner in, then you show them the provisional patent you've got and say, I will lodge this the day before you write me the check. We then both have 12 months to get this to a point where it'll be able to pay for its own patent conversions, and we can prove that the product's going to work by that time. Everybody's in agreement with that, no problem. Now, how do you protect it in the meantime? Well, first thing you need to do is to protect you from your own employees and from people around you who are working on the project. It might be contractors and others, and people who might walk past and see it because you're working on the corner of the factory that you own, and meanwhile you've got 16 workers there, or whatever they're doing. They wander past and they give you an idea, and suddenly 5 years later, when this is worth a few $1 million or a few $1 billion, they're putting up their hand and saying, well, actually, I helped you with that. And you want to be able to close that out very early. And that's what I do with, if it's going to be worked on in a workshop, in your own factory or whatever, every employee gets a waiver of rights. So they have no right to whatever they do, and they actively can contribute, but they've waived all their rights to any sort of ownership of that project. Very important for a waiver of rights. I tend to get that for all employees and contractors, even staff, even accountants and the like. I make sure that it's on the books, and I put that into a due diligence file, which I'll talk about later as well. You'll also need non-disclosure. Obviously, there are times you're going to take this project out and talk to parties. Those parties might be potential suppliers, potential buyers, people who are going to re-engineer, they're going to test it, they're going to do a lot of different things to it. In a case like that, every one of them should either sign a non-disclosure, or my preference is a confidentiality deed. under contract law in Australia in particular, a contract only happens when you've got, when you have an offer is an offer. An offer and acceptance is an agreement. Offer and acceptance and consideration is a contract. So I like to have consideration if I'm going to have a contract. So rather than do that, I would have a deed which doesn't need consideration and still enforceable. So I have confidentiality deeds rather than non-disclosure agreements. Not much difference, but that's just me. Non-disclosure agreements should all be filed, and that's your due diligence again, and make sure you've covered off every one of them. Don't find yourself having to rush back to somebody to get somebody else to sign it. They should also incorporate all of their employees and contractors and other parties that they're going to share the information with. They should be bound as well. Okay, next we move on to patent survey. Patent surveying is not just, before you get started, you need to know what else is in the field. And that can be a complex process, and that's one of the 4 major things that patent attorneys are really good at. But you may not be able to afford a patent attorney, particularly when you don't know whether this project, firstly, can be owned, it has competition, or secondly, it has a market and therefore it can make money back for you. So you have to do this on the cheap. Now, I have a process which I've used, fairly easy, and I'll share it with you today. I firstly go to Google Patents and I just pull up what I can about the thing. I look at all the keywords that I'm going to be using. I assemble those. I then drive those through Google Patents and I pull out a whole range of things. I may narrow that down a little bit. And then I've got 2 versions, the raw data and then the refined data a little bit, but it's still not good enough for a patent survey. Then I go to I find myself a patent attorney, usually in a developing economy. So I'm paying $12 an hour instead of $400 an hour, and it can make a difference in your project at that time, because that becomes throwaway money. I might spend between $250 and $600 getting a really good patent survey done, freedom to operate, whatever you like, but getting a really good understanding of what I've got before I get started to know whether or not this is ownable. Now, the reason why I do the early survey before I go to these people is because I know that out there's a lot of lazy professionals. And if you walk in there and say, I want to survey on this, you might just get back exactly what you got. But if you take in there your Google stuff and you say, here's the patent, this is where I started with this wide thing, I then refined to this, now I want you to go to a professional level. And they'll understand that you know what you're talking about, you've got this much done, and they have to be much better than what you've given them in order to earn their money. So they'll quote you accordingly, but you'll get a much better price. So make sure that you can control and drive it, because this is throwaway money if the project isn't viable. At that point there, you don't have the 5 elements you need to be able to guarantee that you're going to go forward with this project and that people will help you fund it. Okay, so there's your patent survey work. Now the due diligence records. Now, what you need to do, you need to keep a hard file of this. Everyone thinks, oh, we'll just put it on the computer, it's coming by email, we'll just store it there. No, print everything out and keep a due diligence file, hard copy, which when you go to presentations, you might have replicated or duplicated and taken it in there and said, because everyone you're going to present to for money is going to sign a non-disclosure, and that should be in that file. But more importantly, at that time, if they say, yes, we're ready to go, that's the point you hand it across, not we'll go away and work on it. What I found is a lot of projects die because the inventor isn't organized with a due diligence file to a point where somebody says, great idea, let's take this further, I want to look into this, show me what you've got. At that point there, they've signed a non-disclosure, they've done their share, they're ready to go. If you're not ready to go, then you're disorganized. Nobody wants to be all jumping into business with a disorganized person. And understand that in most cases, they don't know who you are or what you're capable of. They may know you as a friend, but not as a business colleague. And your first step is to show them you're so organized, you came in with everything. If you can do that, you can get an answer in 48 hours instead of 6 weeks. That makes a big difference, especially with this cooling down type of attitude, because make no mistake, the people you're presenting to that say yes are then going to go back and talk to their people. Now, if they're a wealthy individual, they probably have advisors. Those advisors are going to tell them, There is no way you should throw, let's say, $1 million at a product that's unknown, to a person that's unknown, to an industry that you haven't been in or haven't tested, and you have no guarantee you're going to get that money back. You don't know when any of it's going to come back. It's just too much risk. Walk away. And they'll be saying that for a very good reason, because they will lose control of that $1 million. So they're always going to be trying to talk that person out of it. Now, the more organized you are, the more likely that person is going to still have all the information you've given them in that pitch to be top of mind, and they're going to make that decision and stay with that decision. And you get a 48-hour turnaround, then you'll probably keep a yes. That's how it works. Okay, so understanding your due diligence records is very, very important. And that's everything from your provisional patent that you've drafted up, list of suppliers and contracts you may have, offers for purchase for different things, target markets research, all the agreements you've got with all parties, including non-disclosure and everything else, all filed away in there and kept. And there's a lot of categories, and you can get a list of those categories from me after this if you like. So very important to be organized from day one. When you walk into do a pitch, you must have all of that. Okay, let's keep going. Now, I've talked about the model being linear, so it's only fair that I show it to you in a circular way, and there's a reason for this. Now, you can see there, we talked about the 6 steps, but there's only 5 there. And the reason for that is because next week I'm going to be showing you all about funding. And if you do funding right, it's no longer a step. It's just an event. So if you can say that funding, which in most cases for, in the 3 to 5 year development time, can take 9 to 12 months to get your funding, and you're going to find 300 people to pitch to, and you're probably going to get 40 to 50 investors of all different amounts of money, and you're going to have those on your books. And believe me, when you start the investor relations routine, it's going to kill you, but that's why we only go with one. But still, at that point there, it's taken 9 to 12 months to bed all that down. So meanwhile, you are working a little bit on your project, but the bulk of what you're doing is dropping everything and running off to pitch to somebody who you said you met at an event or at a pub or wherever. You thought that man's got money, that woman's got money. I'm going to pitch to them and see whether or not they will get on board with my project. And we call that hunting and begging. Hunting for high net worth individuals and begging. Now, we can eliminate that and take this to a 2-week turnaround with 10-4-1, which is identifying 10, pitching to 4, preparing and pitching to 4, and getting 1 offer. That's good enough for you. That's all you need. That can be done in 2 weeks when you understand how to do it. So it's no longer a phase. It's now just an event. So that's why we only have 5. Now, the reason why I'm showing you this is not for the cycle that you, at the exit value realization point, you may sell your project. Do you go back and start another one? No, you don't. If you're smart, you've learned a lot in that process, and that amount that you've learned can be shared with other parties for their benefit and your benefit. So we cut corners. You go straight across and become the next funder for another project in your industry or market that you have a very good understanding of, because it's not just money you're putting into it, it's all your expertise. If you can shorten their development time from 3 years down to 4 months, because you have the expertise to do that, why wouldn't you? And you can, traditionally we take, let's say a $500,000 investment, turns out to be around about $1.2 million after 18 months. It's high risk, but it's not high risk if you manage it because you've got the expertise. Sometimes it's not high risk because I'm managing it, but they're paying for that if I am. So on the second lap, you just jump straight across it, become the cornerstone investor, the guy that puts the money in, but puts in all the expertise and contacts and everything else for sales, contracts for, you might bring in the contractors who can do the work, supply, do the engineering, get the validation, get the checking off the product to make sure that it meets all the standards, trials or whatever it needs to be done. You've got all the techniques, wherewithal, people, facilities to do all of that. You're adding value. It's not necessarily cash, so you don't have to bring in $1 million. You might only bring in $200,000. The rest is all your services and support that you have already as an infrastructure. So keep that in mind. You can become the cornerstone investor on the second lap. It makes more sense to do that. And then after you've done that for the next lap, the third lap around, you don't just jump into one project. You set yourself up as the incubator. Now, the incubator might take on 4 to 12 different projects, as long as they have good alignment on the industry, the services, the markets. Could be any different number of things, but you're looking for projects that you have a good fit and you already have a good access to the markets, because that's going to take away all your risk. And you have the facilities and infrastructure and skills within your organization to take all those projects on. And then you change the game. You now become the teacher, the coach, the mentor, and also the CEO and of those projects. And the inventors become heads of R&D for their respective times. For those of you who want details on that, the last chapter in this is how to become the incubator. So this book, which you can get at any good bookshop, including Amazon, if you don't want to call that a good bookshop. Now, to step you forward here, we've covered a lot of things, and I've given you just 3 or 4 key points, and I've dumped a lot of information on you. Now I'm going to get you to understand that at the end of this second phase, we're about to move into launching the project into early stage commercialization. We're going to start trading, but first we have to raise money. In order to transition to that, we need you to know that you have the 5 main things that you're going to need. So for those of you who have your phone ready, you can actually take a photo of the screen. Others, I'll give you a link, you can go back and watch this. But these are 5 important points that you're going to need. So what are those points? First one, independent market validation. Don't try and do this yourself. Now, it doesn't have to be you commission market research. You can actually buy desktop research on the market. I went out and bought desktop research on an industry. This was actually collagen, collagen scaffolding, how they build organs from taking animals' collagen. And we bought 2 or 3 or 4 different reports, one on one level, one on the other level, and across the industry as a whole. And we're able to pull that information and work out our pricing and costing, and then work backwards to a market, and we could estimate our market with fairly healthy certainty as a result. That's important. It's also evidence for you as to why people should jump on board with your project, as long as you've got independent market validation. Now, that is secondary research. There's also primary research. Going out there making early sales is one thing. Although I prefer to not make sales, I prefer to build up the demand by saying, would you like one of these? I can put you on the list for when it's ready. We have to go through trials. We can't let it go yet. And as a result, I get 150 people for purchasing or giving me forward orders. That looks great before I start launching it. On the first day, I can sell 150 at $100,000 each. It's going to look really good. And particularly if you're going to crowdfund or crowdsource it as well, that bringing your hungry herd of visitors immediately says, whoa, these people have in the first 10 minutes have made this many sales worth this much money. That the algorithms will actually jack you up, and you'll start to be noticed by everybody, because they'll start to promote you, because it's in that platform's interest to get you noticed, because they're going to make more sales. They make 8% on that, so they're very keen to do that. So market validation, very important. Next is proof of concept. Now, I'm not talking about, look, it works. I'm talking about in the market, how it's going to resolve a problem that's out there. And you need to show that you can resolve that problem. Even if you don't sell them the product, you show them under confidentiality how to work it, how it fits, how it will do that. And then you get some testimonials from that. Proof of concept is very important. This is de-risking it for you just as much as for the investors and for people who are going to take the project and scale it later. Next is ownership. You need that ownership, you need the protection. If you don't have these bedded down, as I've taught today, then ultimately you're just building something for somebody else, because there's people out there with more money, more contacts, more expertise, who are going to jump over this, just walk straight through you and start. That's going to happen anyway with some products, particularly medtech and pharmacology, where they don't care about patents. They just ignore them. They'll just go straight through you and say, sue me. And if you can't afford to sue them, and then turn up at court every time they get a stay and a motion to delay, and they just push that on, and every time they bring you back to wherever that venue is, it's usually East Texas if you're in the United States, and that means if you don't live there, you're going to have to travel back to there and attend court, and the day you don't is the day they ask you for the court to make a summary judgment, and you've lost everything. So the game is played like that. So patents don't always work. Patent insurance does, but patents don't. Next, the transition audit. So you need to understand this. We're going to cover off the transition audit a little later on, but I need you to understand it early in this section. Now, prior to going to market, you need to be able to prove that you have everything you're claiming you have. And you need to show evidence of that. Now, I run transition audits for companies who are about to take investment capital, usually Cornerstone Investment Capital. Now, at that point there, people come to me, usually the Cornerstone investor, who's generally somebody who's been around, invented his own and come back in as the Cornerstone investor. And they say to me, will you conduct a transition audit? Now, how that works is it's physical. I don't do a virtual. I'll sit at a table and I'll have on one side the inventor, on the other side the investors. Now, it could be that the inventor is represented on both sides, but we still go through the physical demand of show me what you've got. Now, let's say you have a software solution for something, and I say, okay, show me the documentation you have for it, show me the market research you have for it, show me the investment you put into it, show me the bank statements on the sales, show me the source code. Yes, I want to see the source code on the table. I'm not going to touch it, and it might go to across the table and then into a bank vault. I don't care, but I need to know it's there. But you need to put it on the table, because once you take someone's money, it's no longer yours. It's shared with that person. They own part of that, and they need to see it's there. So there's no smoke and mirrors. I want to see packaging. I want to see distribution agreements. I want to see what your warranty terms are and how you do that. I want to see whether you've done an operations manual, whether you've done it online with videos. How has it all worked out? All of this sort of stuff, you really need to get organized and put it on the table. So most transition audits fail the first time around. Second time around with a checklist, yes, they've got it all. So these days, having a transition audit checklist is a great idea, and I can give one of those to you. Our members get that in the membership group, for those of you who are members. Next, due diligence file. I've talked about this. You've got to have that absolutely ready to go, and it's got to be duplicable. So at any stage there, you might present to 4. I don't recommend that. I recommend you prepare presentations for 4, and we'll show you why, because they're quite complex the way we present it, and it's specific to that one in prospective investor. But at that point there, you need to have that file ready to go for that person. So you've got your core file, plus you've duplicated everything else, and you put it into, I usually do it in the concertina file, and it's physically walked in. At that point, it's on the floor. We do the presentation, the pitch. At the end of 20 minutes, they're going to say, this is a great idea. We want to get on board. We can't afford not to. That's what I expect them to say. And at that point there, I'll say, let's go through due diligence. This is how we're going to work it. This is the timing we're going to give for everything. And we're going to start with putting everything you need on this table. Here's a list of the checklist of the due diligence file, so you understand everything you need is there. If there's anything else you need to let us know by close of business today, we'll provide it, or any other time if it came to that. But most people just say close of business and they provide it all. So if you're organized, they'll get organized just as quickly and efficiently. Okay, so there's your transition. You'll need a transition checklist. If you take a photo of that, that's important for you for the later time, because you need to know you have that in order to say, I've closed off the first 2 phases of my development project. So where to from here? Let me give you some checklists that you can get. Firstly, your transition audit and due diligence files checklist. For those of you who are members in our Facebook members group, you can actually get that. Next, you can book a strategy call with me. Again, get your camera ready. At the end of this, you can take a picture. Now, what that is a 45-minute strategy call, no obligation. I don't want to talk to everybody. If your project's ready to go and you think you need help and you can get a benefit from this, and you want to learn more about some of our courses, or getting our ideation and modeling done, or getting something contracted out just to get you past the hurdle that you're on, then it's worth talking to me. And I do online coaching with people one-to-one with with Zoom, and I also do it one-to-many with our Facebook group. So you can be part of either program, depending on how much you want to spend, how quickly you want to solve your problem, and how private you want to keep your information. Okay, so you can book a strategy call. 45 minutes, there's 15 calls that I make, 15 slots I make available free for people who are on this call. That's your specific login. It's not the same as every other login you see if you watch my videos. That's because you get 15 spots as a result of working all the way through today, and you've got to this point now. You can also join Kickstarting Inventions for those of you who haven't. In LinkedIn, we have a subgroup called Kickstarting Inventions. It's free, and you can get in there and you can find contacts. There's about 1,500 inventors. There's another 100 or so providers, service providers like patent attorneys and contractors who can help you where you are now. And some of them might be more local to you. So by all means, it's a good source. You're asking questions, getting answers. You're expected to help other people. It's mastermind type group where somebody says, I've got this problem, and they'll get 15 different answers. And believe me, some of them are different. But at that point there, they can at least get some free information to keep them moving. The all important thing about commercialization, you must keep it moving. If it doesn't, it's going to lose value every time. Now, finally, for those of you who want to get your provisional patent started, it's good to know the process. Don't lodge it, just draft it. You can go there, take a photo of that if you like, and you can go to the USPTO help desk if you like. That's pretty much what they do there. And you can actually do your self provisional patent if you like, and do your own designs, get it all ready. I recommend strongly that you don't lodge it, but you use your confidentiality agreements. And later on, before you go to put in a provisional patent, you do see a registered patent attorney who will take what you've got and make something that will actually be defendable in court. That's important. Once you've done that, you've saved $60,000 because you haven't had to convert in your own money. You're going to be using the project's money to do that at a later time, and you don't need to provide for that. If you have that 12-month sprint, which we're going to talk about in the transition, you'll be able to make sure that there's cash flow within the organization at that point there, so you can actually get money for this. Okay, so thank you very much. That's today. Now I'm going to switch back and go to my Q&A. For those of you who like to ask questions, let's get stuck into it. Now, some of these questions I may take on notice. It could be a little bit different. Okay, anybody have any questions relating to what we talked about today or any other stuff? So we're getting nice comments. That's good. I like to hear that it's good and everyone's enjoying it. But anybody have any questions? I've either done a really good job of explaining everything to everybody, or a really bad job and everyone's confused. So any questions, go to the chat box, pop them in there, and we'll be able to answer those for you, and I'll be sharing that information. Obviously, if you have a personal question, you can go online and book one of those 15 slots that I've talked about. Did everyone get that? I hope you took a photo at the last minute. So okay, there doesn't seem to be that many questions today. So I'm going to assume that I did such a good job of explaining it that nobody really wants to ask me questions. Okay. Okay, well, I have one here. I had a patent filed and it was denied twice. Now I have to appeal again. What do you recommend that I do? I recommend you go and see a patent attorney. I'm not going to give patent advice. But that shouldn't or wouldn't slow me down from commercialization. I see commercialization as totally separate from the patenting and protection, but I do see it's essential for you to be able to then own your project later on. Now, a lot of different things that, a lot of different questions come up immediately from that, and the patent attorney should be able to help you. If that patent attorney doesn't help you, I'd find one that does. So your patent attorneys really not just lodge patents, they defend patents. That's where they make most of their money. And you need to have a good patent attorney who can actually argue the point and find out why. Everyone is always going to, when your patent converts, a million people are going to come forward and say, that's the same as my design. And that's not really the case, but you have to defend it. So if you have that and you have a really good patent attorney who can defend, it's going to cost you money, but you can do that. Now, alternatively, you can find a developing country patent attorney and just keep the process going. But you can also go to find a patent attorney who's also a barrister, and that person will do the arguing for you. Patent pending for 2 years. I can't give you advice on patents. I'm sorry. This is not all about patents here. It's all about the commercialization. There's a lot of parallels, but again, patent attorney advice. Might I suggest that some of these questions may be excellent to bring up in our Kickstarting Inventions group, because there are patent attorneys in there. They'll want your business. They have to earn that business. And the way they do that, because there'll be 15, maybe 20 patent attorneys in there, in order to get your business, they're going to help you a little bit free. So you're going to get some free advice, and then from there you can pick somebody who you think, and you don't have to pick somebody who's down the road. You can pick somebody across the globe, because you're now in a global village, and you have the opportunity to pick somebody you can work with on Zoom, one-on-one, doesn't matter, because they're all plugged into the same system. So I can't give you advice on whether you should get a new patent attorney or a new patent. That really comes back to your choice and a patent attorney's choice, a patent attorney's assessment. But yes, I would get free advice from places like Kickstarting Inventions. There's also patent attorney groups on the web, and you can get in there, ask a question. They'll all want to get your business, and they have to earn that. And to stand out from everyone else, they have to give you something free. That's a great idea. Get it free, assess for yourself, and you'll end up picking somebody who might be different from what you've got. So I hope that helps. There's not much else I can extend on from that, because if I try to do this, I'm going to start crossing over into patent attorney bill, and I'm not there. I'm not a qualified patent attorney. I've done a fair bit of it for myself, but I haven't done it for others. And it's not really fair to suggest that I know anything about patents. I have a little bit of know-how, and that can be dangerous at times. I don't have the skills, and I don't have the qualifications. So it's like asking me to do an appendectomy on you. I could probably do it. Am I qualified to? No. Should I? No. But if you had a burst appendix and you and I were on a deserted island and you needed help, yes, I'd get myself a scalpel and do it for you. So whether or not there's enough alcohol to knock you out, that's another thing. Okay, asset protection. Yeah, putting IP. I've had a suggestion about putting IP in a unit trust or a parent company and licensing to the trading companies. I could say that is a great idea, but I can also tell you that an investor comes along, they want to be part of both. It's not fair to expect an investor to jump into the commercial model without the asset, and that just won't happen. So their risk is their risk, and so if you're comfortable with the fact that the person who's going to put money in and become a cornerstone investor and an actual partner in your business owns part of the operation company, but also part of the asset company, then go ahead and do that. It does make sense. If one gets into trouble, it doesn't affect the other. So having two tiers, that's the first thing accountants and lawyers will tell you when you get advice, and everyone's going to give you advice on your patents and advice on your intellectual property, just like I am. The difference is I've done this for 35, 36 years, and most patent attorneys or accountants haven't done it to commercialization at all, and they just learned from what they've seen me do with others of the likes. They can get them into trouble just as much as me giving you patent advice will get me into trouble. Okay, so thank you very much. There doesn't seem to be any more. Nobody's jumping into questions, but that's good. It assumes that I've covered off what I needed to cover. We're pretty much over our time now, so thank you very much, everybody. And next week is a big one. It's all about how to fund your project. So I'm looking forward to that. I always get a lot of questions on that, but it does break you out of the mold of I have to hunt and beg from new investors. For those of you who are hunting for something to have bedside table reading, $1 Billion Napkin is available from most bookstores. If you write to me, you can buy a copy. I'll autograph it and send it out to you. If you wanted that and you wanted it autographed, I also need to know what your project is. I write that in there because that becomes a historical document later on when your project expands. Okay, so thank you, and I'll see you next week. Okay.